Welcome to Exchange Rates UK TV. It is the 10th of August 2021, taking a look at Bitcoin. It looks like one big giant wedge of badness. Unless there's a pretty significant breakout above 48K, it looks very much like you could see a really substantial drop here in the near future. So, yeah, I mean, I don't know how else to describe it. This looks like just one big, massive rising wedge. And in fact, the slope here, at least on the point and figure chart, has gotten even stronger. Now, if we look at the point and figure, the candlestick chart, look at it on the weekly, clear rejection against that weekly Kijun-sen again. If you look at the bodies of the last few candles, they look like they're contracting as far as the range that's traded within the body. Looking at the daily chart, I mean it's got a lot of topping patterns going on here. Not saying that anything can't come out of this where it just continues to be bullish and drive up higher, but for right now, it looks a little on the weak side. Now there is regular bearish divergence that exists on this chart, slightly between price and the RSI, but also between price and the composite index, and the composite index has dropped down lower. Now, I think that this is all a good thing in the long run because I want to see Bitcoin drop down to support probably at that 38K zone, and I would love to see the RSI get down to 50 or 40 and find support, because that to me would confirm that a bottom is in and that support is holding, and that will just that will bring it way beyond that 50K zone, probably with enough momentum we'd create new highs on that next swing. As far as when that were to occur, if we're using the Ichimoku system as kind of a guide, that would be late August, early September if we're using the Kumo twist as kind of a guide. The weekly chart doesn't really give us any lead there at all either. Yeah. Okay. Yeah, I'm not seeing anything. Yeah, here's that hidden bearish divergence we looked at on the weekly chart. Got this high here, a high here, lower highs in price, but then you look at the oscillators, they've got higher highs. That's the definition of hidden bearish divergence. That looks like a very bearish looking candlestick as well. Yeah, this is definitely looking like it's going lower. So going back to that point and figure chart, I like the short here anywhere between, and let's just change this a bit. Let's just change it to the 500 and see what that gives us. I kind of know because I saw it earlier today, but oh yes, there it is. Oh man, that could be really wicked. I mean, so it's a ways down there from where we're at. I guess not terrible, but the entrance here, there'd be a short at 42,500. This would be a sell stop. 42,500. Yeah, drop down there. Profit target would be, so that's probably not very far actually. So there's 1, 2, 3, 4. That's 1,000 times 3,000 minus. It's actually less than it's above the entry here, so maybe not. Well, either way, you could look at, because this whole thing is a big old wedge without having to draw those. If you just look at this, it's even more of a wedge. Got this kind of activity going on here. I mean, that is a definition of a wedge. So the projected low that we would get, go from confirmation swing low, couple zones, there's that 382 at 40,000 and 38,000. So really not much of a difference in what we looked at on the daily chart with respect to where the Kijun-sen was at around that 38K zone. That'd definitely be within the realm of likelihood. yeah, I don't think there's any reason why this wouldn't pan out that way. If it does drop, if it goes to triple bottom and it cracks it, it's got a kind of a double thing going on here. It breaks a bear flag angle, or the rising wedge angle. It breaks a triple bottom. That's a lot of There's a lot of trapped bulls up here at this point. A lot of people buying at the highs turn into really strong sellers right at the beginning of the sell off. So yeah, that's what I would look at, and we'll just kind of go from there. Thank you for watching. Please don't forget to like and subscribe.